Archax is the first and in fact at the moment the only UK regulated digital asset exchange, broker and custodian with the focus on RWA, real world asset tokenization. Tokenization can unlock new range of investors, new markets and new capabilities. When the distribution is there and when the proper liquidity is there, then I think everyone will just come.
This is the Assetizer Podcast.
Hello, everybody, and welcome. My name is Tom Lyons, and this is the Assetizer Podcast. And my guest today is Anya Markitanova, who is responsible for institutional partnerships at Archax.
Hi, Tom.
Nice to meet you. Welcome.
Nice to meet you. Thanks for having me.
It's our pleasure. We're here today in the Gen 2 London office to talk about digital assets, to talk about bridging DeFi and TradFi, and talk about Archax and what you guys do. But first, I'd like to talk about you yourself. You want to give us a bit of your background and how you went. I think you went from a not necessarily from a different background into digital assets.
Yeah, fair. I actually do not come from traditional finance background, rather from the legal background, which is what I studied and worked for quite some years. First in commercial litigation, and then I went towards public international law direction, United Nations, and all of this stuff. And yeah, after that I was in consulting, then in-house, covering public law, trade policy matters. And up until the point I decided to do my MBA, which is when I applied to several schools, I got accepted to London Business School, which was my top choice, and hence I picked that school, moved to London, and there it all started. So I moved first into the traditional FinTech, sort of payments, infrastructure. And since I myself have been investor in crypto since 2018, early 2018, I obviously had a keen interest in the area, and sort of beginning of 2020s, it was very obvious already that crypto is here to stay and that the industry is going to go, that many industries are going to go that direction.
Can I ask you what got you interested in crypto? Because 2018 was an interesting time to get in.
Right. I still think, honestly, back then it did seem to me I was very early, was now knowing what I know, I understand 2018 was not early. I wish I could, I could be in 2014, let's say, but I was just probably too young for that back then. So what got me interested is that honestly, I just first consider it only as means of investment, because someone told me about Bitcoin, I read about Ethereum, and I was like, oh yeah, this assets are gonna appreciate. I'm just gonna invest some of my funds in these vehicles. So originally it was just that, the transfer of value and investment. But then, of course, I started to read more blockchains emerged. All of them had different functionalities, and I was like, oh my God, there's actually the whole fundamental stuff going on there, and it's the framework where lots of industries can create things and they can use it to grow and to further expand. So that I kind of started to see the real implications of that. And this is how eventually I thought I actually want to do it professionally, so not only I want to invest. Because already 2023, I was quite a lot invested into various projects, but I suddenly realized, especially working in FinTech, that that's kind of the angle that I want to target.
Okay, so you got attracted by crypto and discovered blockchain.
Yeah.
So would you consider yourself a crypto person or a blockchain person, or 50-50?
I think probably more on the crypto person side, but yeah, of course, I do have some keen interest in blockchain too.
No, I always ask that question because there's two sides. So I'm the opposite, right?
Right.
Yeah. I got into blockchain in 2016, and I've been 70% a blockchain guy. but also follow the crypto markets very carefully. Okay, so this interest then brought you to, I guess, to Archax,
Correct.
and why don't you tell us a bit about what that company does and your role there?
Sure. So Archax is the first, and in fact, at the moment, the only UK regulated digital asset exchange, broker, and custodian, with the focus on RWA, real world asset tokenization, and overall bridging traditional finance with the blockchain capabilities. I cover institutional partnerships across all of our products, which we have various, when I'm sure we're going to cover some of them further today. So, yeah.
Okay, and you guys have a wide range of products.
Correct. So we based our product offering on the regulatory permissions that we have. We have a variety of regulatory permissions in the UK, which is MTF, multilateral trading facility, regulated custodian for fiat, crypto, regulated products such as securities. We have a tokenization engine, our own in-house tech, chain agnostic, tokenizing on many well-known chains and constantly adding new ones. And we have the big and growing OTC desk, so can provide liquidity. We offer sort of compliance as a service. Maybe you have heard like FinProm's umbrella. We are one of the biggest approvers. And in fact, we are one of the few authorized, FCA authorized approvers on the UK market. So,
Okay, cool.
Yeah, a variety of services. I haven't even mentioned them all.
So, and that's exactly what I want to really unpack in some detail during this podcast, because as you know, we're interested at the Assetizer in innovation and asset management, and also I'm very interested in infrastructure innovation, and obviously, you know, blockchain and crypto is right there, and with the reemergence of interest, let's say, in cryptocurrencies, this is a good time to be talking about those things again. But first, I mean, there's so many things we could discuss. Maybe we can start with the whole real-world assets discussion, because that's also something that's been talked about for quite a while in the blockchain world. And I'm interested in seeing, you know, what kind of projects you're doing in RWA. You know, what the clients are, what people are basically tokenizing or trying to offer.
Right. So, of course, like our main client base lies in sort of traditional finance area, and there inevitably the products that are tokenized would be various financial instruments, debt, different types of funds, money market funds, private equity, so all sort of different financial offerings in digital form. Other than that, we are also very interested and have done various projects, and several of them are in the pipeline in terms of commodities tokenization. So basically creating like the token of the real world commodity, not just like exposure for the ATF, but the exposure to the actual commodity.
To the physical commodity. So,
yeah.
Okay.
One of the actually exciting projects in this area, which I'm sure you have heard about, but I'll mention that it's uranium, the tokenized uranium, where Archax is acting as a tokenizer and in fact as a custodian of uranium, which is a tricky case, because uranium is a very specific radioactive element, and you need, of course, the specialized facility, which there are not so many in the world. There are, in fact, only a few, where we have our account and we hold the actual uranium, and we tokenize, and the tech platform called Trilitech offers it for retail customers to buy, which is actually at the moment the only way the retail customer might buy uranium and gain exposure to this element. Just as retail customers can buy gold these days is not hardly news, right? But uranium is something that before that would be not possible for retail customers to buy, because you would need special permissions to transport it, to hold it, leave alone the fact that the minimum investment ticket would be measured in millions. So like, it's just not like, that's basically not accessible for retail clients. But now they can purchase the token and own physical uranium in the token form, while it appreciates, and it's set to appreciate in the future,
I know
because
that
obviously
quite well.
yeah, it's used in a variety of technologies, including AI.
That's really interesting because we have a client who's done the same thing, but without a token, with an AMC. So you're saying that in terms of your RWA business, it's for the most part financial assets, but it's
moment.
also physical assets. You doing anything like anything more exotic, like art or cars or
We
real estate?
Yeah, so obviously the real estate is one of the major use cases of tokenization. In fact, I think a couple of years ago, where tokenization was just taking off, real estate was quoted as like the first and foremost use case of tokenization,
yeah, I remember.
which so far hasn't proved to be true. I think so far, I think financial instruments are the biggest case, but we're certainly bullish on certain real estate projects. Of course, I think not everything should be tokenized. Not all real estate objects should be tokenized. There is a reason for that, which we also further will discuss as to why tokenization. But yeah, real estate, art, again, we haven't done anything art related in particular, but I don't see why not. We probably will be open to something related to that in the future. Other than that, it's basically, in fact, when you tokenize, like in lots of situations, you tokenize future cash flows. So a lot of intangible things such as IP rights, intellectual property rights, and similar things can be tokenized.
Okay. I'm curious then, so staying with the RWA, when people are coming to you today, well, like what's driving that business? Like why are your institutions coming? Why are they setting up these financial instruments on the chain?
Sure. So for them, it's the way to first offer their products in a different venue. So like offer the products in digitized form in a digital marketplace. With that, potentially to unlock the different range of investors that, again, otherwise for one reason or another would not be would not have easy access to other types of platform, but would have easy access in digital form. Other than that, and with that, obviously, to increase liquidity, to raise funds into the token.
Expand the investor base, basically.
Yeah. Other than that, it's an instant settlement, it's the cheaper settlement, and, the ability to, in theory, trade it 24/7, use it as a collateral, and stuff like that.
Yeah, because that was what I was trying to get at. So, because are you seeing people getting either interested again or more interested in this sort of in the infrastructure side of it? Because we do have the 24/7, and we have the atomic of the instant settlement and all of that. So, I mean, you're thinking people are saying, look, this is actually the infrastructure of the future. Do you think that?
Oh, I definitely think that.
Yeah. Okay.
Yeah.
And your clients do. Okay, cool. All right. Moving on, we want to talk about we're talking about tokens. So you do have a tokenization product as well. What's the business like there?
Right. So let me say something about tokenization. Tokenization per se is a technical process, and it proved to be, and now with all the knowledge that the industry has, proved to be pretty straightforward. That's why you see a lot of companies offering tokenization services, as in basically tokenization as a service. And even more companies will do that in the future. Just because from the technical perspective is not as difficult of a process as it thought maybe that it was. Where the main benefits of tokenization lie and how it ties to, in particular, what we are doing in other offering is several things. First, that you tokenize, but you need to custody what you tokenize. And then, so you need a reputable custodian, and in some cases you need a regulated custodian, because depending on the nature of the products that you tokenize, the token might or might not be a regulated product, as in a security. So there comes a custody. Then after that comes another component as why do you tokenize? You usually tokenize to sell it, in simple terms. So you need a place that can offer your tokenized products, then can list them, can raise funds into them, and this is also what we are doing. So we sort of see tokenization as like the complex matter with the variety of aspects into it, which I mentioned. So, yeah, and we offer them all, and this is where we think our unique value proposition lies.
Okay. You have a stablecoin product, right?
We have a stablecoin,
Which is cool. Yeah.
Yeah, we have a sort of stablecoin services, and again, it varies. It can be as simple as holding the underlying asset, the reserves of the stablecoin in our custody, offering yield for like the risk permitting, holding the yield in the instruments that would permit that level of risk, obviously very, very low for stablecoins, and offering the stablecoin issuer that services. We can act as the proof of reserve attestant for the reserves, so which is again very something that stablecoin issuers need on a regular basis to prove their backing of the stablecoin. But other than that, we offer the whole sort of set of turnkey stablecoin solution. So like starting from the beginning, we can help with structure and with setting a legal framework, transaction flows, and everything that the stablecoin project requires, and then ending in custody and reserve attestation.
Okay. So why would I want to issue my own stablecoin?
Good question. Well, because you would want participants of the ecosystem, either if you're issuing it for a particular project and ecosystem or overall public, you would want them to use it because you earn fees on people using your stablecoin. And why would people want to use stablecoin? Well, they would want to use it for all the reasons that have been named so many times, that it is instant settlement, that it is access to, as in like you take the FX situation out of the equation, so you don't have to worry about having access to different currencies at particular times, which is for some jurisdictions that's actually an issue. So instant settlement, cheaper settlement, and that basically like enabling the.
So if I was building my own little marketplace or something like that, and I want to just have the sort of the payment part.
Yeah, in fact, some companies, they are issuing stablecoins only for certain participants of their ecosystem for them to settle between them.
So it's great to see you have all these different services, and obviously there's much more increased interest in RWA and tokenization and in the crypto side. But we're still, if we're honest with each other, still far away from mainstream adoption of this technology and of these capabilities. So what is it going to take from like today to really get beyond the hype and get this stuff mainstream?
Right. So no, you're right. We still pretty early on, which is good. In a way, it might be, I think, a little bit difficult to be early on. To be early is almost as bad as to be already too late. But no, not quite, of course. So I think there is currently more understanding in the market of what tokenization means and the benefits of it. Obviously, there is still a lot of participants who know very remotely or don't know at all about tokenization, and that's why it obviously hasn't taken off completely and hasn't completely taken the whole world. So of course there's just like some education needs to be done. There's some big players setting up the path that needs to happen for smaller participants to actually kind of seeing this first mover situation and deciding to also participate into that. There is, of course, many regulatory concerns, and as to like starting from the range of people who still think that crypto is useless and crypto is all scam, to people who do understand the functionality of the blockchain, but they would just like to see, to be on a safer side and like to see more regulations in the area to actually bring their huge assets on chain. which is happening. Like lots of countries, and Switzerland in Europe has been leading the way in in crypto regulations. MiCA in the EU. UK has been recently lots of criticism, obviously, but it is like moving. There are conversations about stablecoin regulations. There are other conversations about prioritizing digital asset space and like creating the regulatory clarity for the participants, because that's the clarity that people want, as to know what is exactly the status of the products and on chain. Other than that, I think again there is a situation with that. So like some participants of the ecosystem just see tokenization as like, well, let's create digital form. So in a way, like that's just a token, and that's it. Fun and games. However, some tokens represent the traditional regulated products for which you would need to be traditionally regulated. And some companies in crypto space, they still don't have this regulation. So they have a technical capability, and they probably have a lot of understanding how technical and great ideas on how technical side works. But it's a gray area as to how, like, would you be able to do on chain what you would not be able to do from the regulatory perspective in traditional form. So I think that's that. Other than that, obviously, there are like still questions such as liquidity. Since the ecosystem is just starting to gain traction, liquidity is yet to come to enable the fully these tokenized products to be fully traded, secondary traded, and so on. So I think that's.
Would you say though that among financial institutions there's more sophistication about blockchain and crypto than there used to be? Because I get the feeling that there is.
Yeah, totally. I would say including the big financial institutions. We all read the news that very well-known banks, asset managers, funds, and whatnot, they are all looking into it, and they are all creating their own solutions or using some third parties to enable these solutions. But no, definitely, there is definitely the knowledge gathering happening and knowledge exchanging already. However, there are even more participants, including the same banks, asset managers, who yet are not that sophisticated, in even industry associations such as for example, I recently have chatted with CFA UK, and they were very surprised to learn how many things are happening in digital finance, and they are supposedly the industry body for financial professionals, for certified financial professionals, and they still it's still early on, but it's good.
Okay. And what about the other way around? So what about the crypto natives? I get the feeling that a lot of crypto natives don't really understand traditional finance.
Right.
So much.
Yeah, it's because that's the exact same thing that they would want to escape, probably, and what they always sort of vote against is no, we don't want this centralization, and if you are doing it with traditional finance, if you're doing your KYC, then you're breaking the whole concept of decentralized things. Rightly so, but of course we would need to find the balance, right? So yeah, there is a need for some sort of controls of decentralization, else we're just gonna significantly impede the entrance of players in the ecosystem. But yeah,
sure. So maybe to wrap up, I was just curious, looking ahead, how you see the worlds of TradFi and DeFi coming closer together, how we're going to be bridging that gap.
Right. I think a lot of that is attributable to distribution. So you don't just want to tokenize or bring something in digital form. You want to actually benefit from it, and for that you would need the proper distribution channels, because you want to be able to sell it, you want to be able to use it as a collateral for your borrowing, or like to use it for instant settlement. So that's, I think, when the distribution is there, and when the proper liquidity is there, when these instruments are actually interchangeable fully, then I think everyone will just come naturally.
So one of the things that we do at Gen 2 to help bridge this gap is be able to wrap cryptocurrencies and tokens into bankable securities in the traditional system, right? So usually we use AMCs, active managed certificates. There's other ways you can do trackers. We have trackers on cryptocurrencies as well. And my question to you is, to what extent would you see also the interest to go in that direction, right? Because when you want liquidity, I mean, in the traditional financial system, that's pretty much as you can get, right? So how do you see the interest going in that way?
Sure, no, definitely. I mean, the ability to create the structured product of pretty much any asset, that's great. And like, there's in many occasions, I think the limit is only your creativity and regulation.
Yeah, exactly.
So,
which always aren't going to get there, but
yeah, which sometimes don't go together, but luckily they at least follow the same path. So I think that's great. So you're creating products that before did not exist, and you make them tradable, and tokenization again can unlock new range of investors, new markets, and new capabilities of this product for their issuer. So I think that's a good example of how tokenization can help traditional finance and like such sophisticated niche products such as AMCs.
Right, exactly. But I'm also talking about the ability to take your token and issue it in the regular banking system, right?
Right. So like they reverse it. Yeah.
Because our thesis or what we see is that there's still so many investors who aren't comfortable with custody, aren't comfortable with a wallet, are curious about crypto, but don't really want to, do it themselves. So do you see a market for tokens being offered in the traditional banking system?
Yeah, definitely. Why not? That's not the usual like direction that we're discussing. Usually,
it's the other way around.
We are focused on the other way around, but I don't see why not. And that's the perfect way of probably creating some crypto exposure to very, very considerate and very like traditional investors.
Okay. So Anya, it was a pleasure. That was a great conversation. Thanks so much for
Pleasure was
joining us
mine.
today.
Thanks a lot, Tom.
Bye-bye.
Cheers.